you're watching The Money Show, and there are plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio, and what are the criteria that one should look at? Now, to help you navigate through this maze, today I have with me Shweta Jain, and from Infography, and she'll be answering all of our queries today as our viewers' questions are concerned. And hi, good evening, Shweta. Welcome to the show. And I'm also joined by our viewer, Harsh Jain. Harsh, hi, good evening.
Hi, good evening. Good evening, ma'am.
Hi, thank you so much for sending us your question. Harsh, as per the data that you've sent us, you want to increase your investment amount by 5,000 rupees, but currently the funds that you are investing, okay.
Yes.
Existing funds are PPFS, Flexi Cap, you have HDFC Index Sensex Plan, you have India Small Cap, Tata Small Cap, Kotak Emerging Equity, and time horizon is 15 years. Is that right?
Yes, right.
Okay. Any particular
So I
corpus
just
that you
wanted
want to
to
accumulate?
around 2 CR, which I am looking for 15 years.
Okay.
And with this step up SIP, last year I have started with 30,000 rupees of SIP. Now, for last year April, from this April I wanted to increase it to 30,000 per month. So this
Sure.
5,000 rupees, should I add to the previous funds or add a new fund, or any portfolio change is required? I just want to
Sure.
know this.
We'll help you with that. So, Shweta, any changes required? And if at all he has to add a new fund, what category fund would you recommend? Because he seems to be having quite a bit in his portfolio, especially the small cap.
Yeah, so it's a good portfolio. It's a well-designed portfolio, but it's for somebody who's just started investing in the last years, I would say, because last 3 years we've seen equity run up. We've not really seen the kind of volatility that equity is usually has. So I would recommend that he doesn't add too much to his small cap now. His time horizon is 15 years, which is fantastic. He can add on this 5,000 to the index plan that he already has. So it'll be about 12 and a half per month. And there is PPFS Flex Cap, which is a good addition. So he'll have a good diversified portfolio. For his question on the goal to 2 crores in 15 years, he can get there provided he continues to do 40,000 per month at least, assuming a 12% return. He did mention that he will keep on increasing through step up. I think that's a great way to go.
All right, Harsh, is there anything else that you want to ask, Shweta?
No. Thank you so much, ma'am. Thank you so much.
All right, the best. Let's take Rajesh's question, and that's via email. Shweta, he's not sure as to, if his strategy is going right for him. And so he wants to know if he stops an SIP in regular fund and keeps it in the lump sum fund for long term, and start a new SIP in the same fund, but in a direct way, would there be any implication as far as compounding is concerned? So this is a very common question. A lot of investors who have a lump sum and an SIP done in one particular fund, and they want to stop the SIP, want to stay invested as well as the lump sum amount, from regular mode and going to a direct mode maybe. Anyway, do you think this impacts their compounding?
Not really, Kavita. It's a great idea to stay invested, because if you're going to withdraw that money, then it's going to affect your compounding. But otherwise, if you're going to just let it stay invested for any number of years, for 15, 20 years from now on, it will still keep compounding. So don't worry about, whether it's regular plan or direct plan. And if I stop in this scheme and I continue, the key part being you continue investing, and that what is invested, you let it stay. So it will not affect your compounding bottom line. So please don't worry about that. Going direct has its own pros and cons. So just make sure that you're aware of that and not just falling for the low cost bit.
All right. So that's something that you really need to know. When you're doing a direct investment, then you might have to just keep track of your funds and your investments as well. We move on, and let's take Naman's question, Shweta. And he's got Parag Parikh Flexi Cap, HDFC Flexi Cap in his portfolio, Nippon Small Cap, and ICICI dividend yield, HDFC midcap, SBI contra. Long-term view, but at least of 7 years. SIP amount is slightly more than 1 lakh per month.
Yeah, the portfolio looks good for Naman. The only changes that I would make is instead of an ICICI dividend yield fund, I would rather do UTI Nifty 50. I think that builds a good core. Maybe because of HDFC Flexi Cap size, I would be a little more comfortable with a lower amount. So instead of 17, maybe he could do like a 10. The rest look absolutely fine. No other change required. With a long-term view of at least 7 years, when you're looking at redemption, then start looking at the previous investments and make sure that you're moving to liquid or short at least 2 to 3 years before the requirement.
All right, so that's the viewer query for today. Thank you so much, Shweta, for answering all the questions that come from our viewers. But then before I sign off, I'd like to inform our viewers that we have a WhatsApp number and email ID where we keep waiting for your questions, be it for mutual fund, insurance, any strategy related to your financial goal. We are here to help you out with our experts. 865-797-4571 is our WhatsApp number. The Money Show at et.tv is the email ID where we keep waiting for your questions. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.